What's the deal with tech, if we go back that way, which Microsoft's up 12% in March, Apple up 9%, NASDAQ was up 1 3/4 last week.
Yeah. If you look at...
I mean, it's been, again, when you say, well, the market's been resilient in the face of all this, I mean, yes and no. It has, but it hasn't. The mega caps, as they have done in times past, have carried the show a little bit.
So information technology multiples are up 30% year to date, Scott. It's gone from 18 to 24. NVIDIA, which I own, is the poster child. This year has gone from a multiple of around 50 to 110. So I think these are the thoroughbreds of the stock market. They're the thoroughbreds of the global economy. I think those thoroughbreds need to go back into the stable and have some rest, because that's just, I don't think that's sustainable. And I think those types of companies, you get a bid in those because the Fed is going to stop, the Fed's going to pause, the Fed's going to cut. So you've got a multiple re-rating. But now, guess what has to happen? Earnings need to back up that multiple expansion. Mm-hmm. And so to me, that's why within the tech space, I own a lot of these stocks, but I wouldn't be adding to these stocks right here at this level.
Right, Joe. I mean, even the Triple Crown winner needs a rest. You can't race 5 times in 5 weeks.
I would agree with that, but Goldman Sachs put out a great report this weekend in its weekly kickstart, and it identified the list of mutual fund holdings, what we would call VIP list. And if you look at the allocations, there was significant underweight towards the name that Bryn is talking about, the Microsofts, the Apples, the areas of the market that in Q4 saw their premium valuation finally begin to contract. So we've identified this. At the beginning of the year, the consensus expectation would be that tech would underperform, financials, healthcare, and energy would outperform. And we saw the capitulation 2 weeks ago in that trade. And I think a lot of what's gone on is the expectation that the economy contracts and now growth becomes scarce. Well, you search the market for where you could find consistent, reliable growth. Now you combine that with the fact that there has been one of the highest degrees of under-allocation towards these VIP, quote-unquote, names in years, and the recipe for that is that you're going to see significant outperformance. I think we're past that. I think we've seen that. I don't think anyone could expect that's going to continue over the coming weeks.
Morgan Stanley on Amazon today, top pick. They see 50% upside. 5-0. No one owns Amazon here? You own Amazon?
I do not.
No, you don't?
No,
you own Alphabet.
Yeah, I own Alphabet. No, I bought it well. I'm sticking with it. But
why won't the laggard be as much of a leader as they think? 50%.
You know, it's. I've actually been looking at Amazon, and I may buy it, but it's been dragged up with the Nvidias and the others. So I think I get another chance at it. I'm not in a rush to buy anything. It's not compelling enough for me, Amazon, to step in here right now.
Well, what are you looking at it? You say you're looking at it. You may buy it. I mean.
Well, if you get a flush in the market, I don't want to start doing my work then, right? I want to be prepared and be up on it. So you have your shopping list, that one that's on it. Deere's on it also. So it's not just technology.
It's been a dramatic underperformer, though, month to date, in terms of the mega cap
run. Think for good
it's
reason.
only up 4%. Everything else in the space, well, Apple's up 8.5%, but all the others either mega or right on the doorstep, if you want to put NVIDIA in that group, we're up double digits.
But you also
percentage points.
You also have, though, think about Microsoft and NVIDIA get the ChatGPT, the AI push, right? And then Tesla re-rates itself because it was so low. And Apple is just coming out as a decent multiple. Amazon still has a high PE. And where do they make money? In the cloud. Well, I would buy Microsoft over that all day long, because Amazon still loses money on the consumer side. And so I think it's a high PE stock that loses money in very important business that we all use. And people are saying, hey, I'd rather own a Microsoft that has 5 or 6 chassis plus this now AI than an Amazon that still has a new CEO, which I get he's been there since '98, and they hired what, 740,000 people
and they've got
during
the
the
slowest
pandemic.
Cloud. Their growth, their cloud growth has slowed the most out of Microsoft, Google, anybody's.